everybody, it's a stable lad. Welcome back to the channel. For those of you who are in America, I hope you had a wonderful and grateful, incredible Thanksgiving. And for those of you around the world, I apologize for the delay in the steady flow of content that I've been producing, but had a holiday time this week with the kids, and so it just took a little bit of time off to enjoy with the family. But I'm getting back into it now. So, of course, the next coming couple of weeks we have the Christmas holidays, New Year's, and all that stuff. So things will slow down a little bit towards the end of the year, but I'll continue to sort of send out hopefully steady content around stable coins and stablecoin investing as I do on this channel. But before we get into all that stuff, I want to talk about some macro today. So this video is going to touch a little bit on what's going on in just sort of the macro world. I'm also going to touch on a couple of the positions that after the balancer exploit and the stream finance problems, I had a couple of positions that went underwater. I'm going to talk about several of them that were recovered, which is really cool. I'm super happy about that. And then I'll get into some of the positions that I'm looking at. So I haven't deployed. I've got some cash positions in my portfolio as I rejudge everything, and I'm going to be deploying those. And so I'm just going to show you some of the APYs I'm taking a look at, and just some of those things I'm thinking about, and some of the things that I'm just seeing in the space in general. And I'm going to do that with a sort of just a little bit of a different lens. I did over here on my Substack a re-rating of, I said here every DeFi protocol in my stablecoin portfolio. I did miss a couple, so I'll be adding a couple over here that I did miss. And if you do have any that you specifically want me to touch on or talk about, I'm happy to do so. So if you leave those in the comment section, I'm happy to look at those. Whether you want me to discuss a specific blockchain, a specific protocol, or whatever, I'm happy to kind of start to do that. Sorry, turn that music down a little bit. Another thing that I'm going to be doing is I'm on my Substack in relation to this is I'm going to be doing the same exact re-rating, not just for, so this is the DeFi protocols. I'm going to do the same thing for blockchains, and I'm going to do the same thing for stablecoin assets. I did earlier this year a stablecoin ranking. I'm just going to adjust that to make sure nothing's changed towards the end of the year. I'm personally staying away from a lot of the higher risk stablecoins at the moment because I'm just worried that a prolonged bear market will really destroy that. So if you want to follow all that, it's over here on my Substack. These are this is free. So I'm doing these, I do a couple of articles about the ratings and things like that free, and then I have, for paid subscribers, I have my actual full portfolio breakdown. I have all the positions that I'm moving into, so the actual positions, the actual sizes of those positions. I'm creating a bunch of other tools for paid subscribers too. It's not expensive, and I'm not, this channel's not, I'm not trying to like peddle anything like that, but I do all this stuff for free. So if you want to help support the channel, help support me build this thing, I'd love for you to follow that over there and become a paid subscriber. You'll get the full portfolio. We can converse on there. You can talk to me and add comments and questions and specifics. And so I'm trying to add more for paid subscribers over here on Substack, but there's a lot of free stuff as well as there is on YouTube. All right, so let's get into the video today. So I've built my portfolio, and I've talked about it, to weather any storm, right? So the point of the stablecoin portfolio that I talk about here is to weather ups and downs, Bitcoin crashes, whatever. It doesn't really matter. It's supposed to make money in any market. But I am an investor in Bitcoin. I have Ethereum, Solana, and a bunch of other tokens, right? And within crypto itself. I am in equities. I am in real estate. So I pay attention to macro. It's important, right? As just a well-rounded investor. And so it's worth just sort of talking about and hitting on a little bit every once in a while on this channel. And I think there's a point that I think is important to mention here, and I'll get to it in a second. But before I do, let me just sort of say, right, like we in this space, we focus on Bitcoin moving up and down, and when it does, we start to look for the narrative as to why that happened. And sometimes, especially when we see a crash, we look at these things like Shanaka talks about here, about the Bank of Japan changing their rates. We look at quantitative tightening stopping. We look at all these different things, and sometimes it's as simple as leverage in the system that just gets wiped out. And if you notice that every single time Bitcoin has dropped over the last few weeks since the October 10th $20 billion liquidity crash, every single drop from then follows a liquidity crash, like leverage in the system. Every single time, it's leverage that gets wiped out. And so I just want to say, like, I'm not a macro expert. There are people that are way smarter than me. Shanaka is way smarter than I am. And so he could be absolutely right. When I come and do these macro things, it's from listening to a lot of people that are way smarter than me, taking in what they're telling me, and then sort of just creating my own sort of narrative that I think makes a lot of sense to me. And again, this is just the Stable Lad's opinion. This is not, this is definitely not financial advice. And again, there are people that are way smarter than me here. But sometimes I think that we're just trying to fit a narrative into it. And it may be part of the reason. It may be something to do with that. But I think a lot of it has to do, especially in Bitcoin, especially in crypto, with market manipulation. It doesn't take much to move the entire market. And when you have big traders out there that hedge positions, they can dump spot on the weekend, on a Saturday, which is usually when that happens, right before the first of the month, right? So right at the end of the month, they dump spot and they make money on those short hedged positions when the market goes down. And if this were to happen in regulated markets, there would be investigations. It doesn't happen in crypto, and so people take advantage of it in crypto. Again, I'm not saying that Shanak isn't correct, right? He wrote, like, immediately he kind of came out here and said, this chart is really concerning where Japan has raised the rates, right? But look, he's saying, like, we just raised it so much over here. But look, it's been going up since 2020. This is not like a new thing. It's been going up slowly since 2020. And the Japan trade was really wiped out. I think it was August of 2024 is when it really got wiped out and everyone got clobbered. Maybe it was before that. But I think, if you're a really professional money manager, you were out of this trade already. Like you weren't borrowing money from Japan anymore. It wasn't a risk-free trade anymore. So I mean, maybe there's hedge funds in this, maybe there's VCs in this, maybe there's people that are still doing the Japanese carry trade and got wiped out. And maybe he's right, and there's just a ton of that this just murdered Bitcoin. That's totally possible, but I think it has a lot more to do with market manipulation than that. But maybe I'm wrong. Either way, I think the point is, right. He talked about he immediately put the Japan trade there, and then he immediately this is the wrong. Let's look here. Hold on a second. He wrote here. I'm not going to find it here. Oh, here. The largest liquidity drain in modern history ends today, December 1st, 2025. For 30 months, the Federal Reserve moved over $2 trillion from global markets. So quantitative tightening, right? That program dies at midnight tonight. I don't know if it actually died at midnight before the 1st of December. But either way, they're no longer tightening. So the Fed. So what does that mean? They're no longer tightening. They're no longer taking money out of the economy. They're supposed to start putting back money in. But just because quantitative tightening stops doesn't mean quantitative easing begins, right? So the reason why I point all this stuff out is just like, I don't think anybody really fully knows. We look at these things from a broad perspective. We try to make our best sort of guesses, right? And everyone's doing the same damn thing. People are looking at these financial levels. People are looking at charts. People are saying, oh, there's, psychology levels here. And sometimes, it's all a self-fulfilling prophecy in markets when you look at charts and stuff like that. But overall, I tend to sort of step back and I sort of say, like, what's really happening here? I think there's volatility in the market because the AI trade got too hot. There's a few companies that are holding up the entire market, right, because of what AI can potentially mean, right? That can happen, right? The markets are forward-looking. Then you have bond yields in Japan that's changing a little bit. You've got quantitative tightening that's stopping over here, as he points out. You've got you've got a new Fed chair coming in, right? So Trump has a name, he said. He's got a new Fed chair coming in next year. He comes in late next year, but he's probably going to start influencing the Fed come January as he starts kind of attending meetings, right? So we have this left-leaning political Fed, and we've got a right leader coming in that's probably going to be buddy-buddy with Trump, right? And like the Trump agenda. So I think what we've got is a lot of interesting things where we're going to have a lot of spend happening, a lot of cash that's moving out of these trades and getting ready to deploy those elsewhere. That creates volatility. Markets hate volatility. And so we've got really uncertainty in the air. We have people talking about early bear market signals, and that's totally possible. We got people, if you're on crypto Twitter, it's like full bear market territory. Everyone's like, okay, we'll see you in a year, right? Thinking that this is the whole 4-year Bitcoin cycle. I just personally don't think that's the case. I think the 4-year cycle is sort of a meme at this point. And I think that if we do have a bear market, it's not going to last very long. We can argue that we've kind of, in a weird way, been in a bear market, except for Bitcoin. But anyway, I just want to point all that out. Just like these are the things I'm sort of thinking about. And then we have Tom Lee. He won't stop buying ETH. You have MicroStrategies. They won't stop buying Bitcoin. They're buying less of it, but they won't stop buying. And so, look, I don't trade along with Michael Saylor, but Tom Lee is a different sort of beast altogether, and he's not a dummy. Now, maybe he's just playing this to move the market itself. Maybe he's buying it for the next 10 years because he really is that convicted. I really have no idea. But 10.5 billion of ETH is not a small position. So I bought a little bit of Bitcoin today just to take a punt. I'm a spot buyer. I'm not a leverage trader. This is not a trade for me. I'm happy to hold it for 10 years. I don't really care. If the market goes back up tomorrow, great. If equities take a little dive again and Bitcoin dives more, I've got some cash to play with some more. But I feel fairly confident that if we do have a bear market, that it's not going to be long-lived. Could it be wrong? Totally, 100% could be. Maybe the repositioning of risk and all that kind of stuff, maybe heading into the midterms next year creates volatility for most of a year, in which case Bitcoin could really hit bear market territory for sure. So we'll continue to watch it. We'll continue to talk about it on the channel. For a stablecoin portfolio, that means I'm going to be making less money in this stablecoin portfolio. As I build these portfolios out, when I say that I want to average 15%, that's averaging 15% over a year, right? So in bear markets, depending on how prolonged they are, I'm going to be making less. And you can see people are going right here. Like this is the TVL on DeFi Llama. People are gravitating towards the quality here, and they're willing to take smaller amounts, 4.78%, 3 billion in here. Sky Lending, 4.5%, 4 billion in here. So these are big investment pools paying fairly low amounts, and people are happy to take it because they want quality in this market. They don't want to risk themselves with some high-risk stablecoin or high-risk investment positions. So I see a lot of Aave on here. I see a lot of Aave, right? I see Camino Lend, and I see a lot of Aave, but I do see, here's a little bit of Morpho, but again, low risk, right? So I'm seeing a lot of flood to safety. And I expect to make a lot less in this type of market. But again, I expect it to be shorter lived. And when the markets expand and bull markets come back, there's just more opportunity. I don't increase my risk. It just increases the opportunity. Up on this, the top 20, you'll see Pendle here. You'll see Euler. You'll see all these sort of gray bead protocols reach these levels up here and become a lot more attractive. And so without even increasing my risk, I'll increase my APY. There will be new protocols that launch, and so I'll put a little bits here and there and sprinkle a little high risk stuff. I'll have smaller positions there, but I'll get airdrops from them, and that bumps up my APY and all that kind of stuff. So again, blended portfolio. In bear markets, I expect to make 8%. In bull markets, I expect to make closer to 18%, and we blend that out between 10 and 15% is what I look for in my stablecoin portfolio. It's what I hope to get to in that market with little to no volatility if I can avoid any volatility.
Let's take a quick pause.
If you'd like a simple reference guide that shows you how I think about building a stablecoin portfolio, from risk tiers to position sizing, and even how insurance fits in, I put together a free guide you can download. It's the same framework that I use myself, designed to keep things steady and easy to follow at a glance. The link's right below this video. Grab the guide, and while you're there, make sure you're subscribed so you don't miss the weekly updates I share on how I'm adjusting my own portfolio. All right, let's get back to it. All right, let's get into what's going on with some of the positions I recovered. So I had a couple positions. This is on Euler. I had two positions, one with Hyperrhythm on Plasma and one with Telos on Plasma. Hyperrhythm already distributed 70% back. So my portfolio was underwater a teensy bit last week. It's now profitable again. And my APY is definitely down on the year because of these issues, but I'm now profitable again. So on the year, which I'm very happy about. They also talk about getting the rest of the 30% that they haven't covered here. They're still working on it. It's a work in progress, but they're hopeful that it's coming. Telos has also said the same thing here. This was my position, Telos Surge USDTO, and it looks like they have a remediation strategy that's slowly coming, and they have a really cool way that they're going to do it, where they're going to, I think, send a special token that's worth a specific value, so that it's not like everybody heads to the withdrawal gates like a bank run and first come first serve type of thing, which is really great. I bring these up not just to sort of show that I'm happy that I've making my money back, and that the portfolio has gone positive again, but I think, when you go to when you do your due diligence like I have on Euler, and I'm not putting my money on some fly-by-night protocol. I've done a lot of research on Euler. Their team is building in public. Their CEO and founder is building in public. He's on X on Twitter. He's all over. He does podcasts, and we know his name. We know his picture. Like we could see who he is. Like, you have this plus these teams that have built these vaults. They make their business on these vaults. They don't want to ruin their reputation because they want to continue to fill these vaults. That's how they make their money. And so I feel like when you do your due diligence and when you work with protocols that are not fly-by-night protocols, when things happen, they tend to figure out how to save their asses, right? And by saving their asses, that means you get your money back. So I'm not saying that always happens. Euler could disappear, Hyperrhythm could disappear, all that kind of stuff. But like, you look at these kinds of things, right? And it's like you've got this crypto asset manager based in Tokyo and Seoul, backed by Hashed Official, backed by Coinbase, backed by Samsung Next. Like, when you do your due diligence and you find these good protocols with good vault management and all that kind of stuff, you can expect that when things happen, it's likely that you're going to get your money back. And hopefully they can avoid the things happening in the first place. But in cryptos, that kind of stuff does happen. And so that's why I try to stay with things and that's why I've set up my entire strategy to have a portfolio mix, but also focused more on low and medium risk stuff. And that's why I don't jump into the high APY stuff all the time, unless it's with really super small positions, because those I feel like are higher risk to never be paid back, because those protocols are likely to just disappear entirely. Okay. So those are the positions I was paid back on. I also just really quickly mention and shout out again to OpenCover. I covered this a little bit, I think, on one of my last videos, but I did recover money from OpenCover on two positions that I had here. OpenCover provides insurance through Nexus Mutual. And I just wanted to give it a shout out because it's just so cool. Like, they've got all these protocols in which they provide insurance for, and it's really, really easy to work with them. Now, you could see here, right, it's 0.28% per month, right? So these add up and they eat a chunk out of your APY. So again, this is a sort of a personal decision whether or not to kind of take out insurance on any of these things, but it's really, really, really cool that you can do that. And on the two positions that I had insurance on, I reached out to OpenCover with a quick email. They got back to me within 20 minutes. I sent them the details of the transaction that was in question. They sent it over to their engineers to review it. And then Nexus Mutual paid it back in like a week. And I got those funds minus I think it was like a 10% deductible, which maybe goes to Nexus Mutual or Nexus and OpenCover. I don't really know how that works. But after the 10% deductible, I got my money back. So really, really happy that I was able to recover almost my entire amount over there. They also have not just protocol covers, but they have DPEG covers, right? So like you can, if you want to invest in USDE and are worried that maybe in a deep bear market they might not last long, you can, for 0.28%, for 28 basis points a month, you can buy insurance. Same thing with ALUSD. This is Alchemex's DPEG. It's pretty expensive at 0.39%, but you can, if that's something of a concern, you can do that. Curve USD, the same thing. So I mean, look at all these things. Like if these things depeg, you have a way to recall and get insurance. This is a really interesting one, right? Like this is USDAI. I've been really worried about this, but there's so many good pools in here. I've been considering potentially taking out insurance on this. I'm not sure how I would rate that, if I would change my rating at all, but I'd be interested in maybe taking, there's some really good pools for USDAI, but I'm really worried about DPEG. So I might take a look at something like this type of insurance. Anyway, just something worth pointing out. Okay, now on to the APY portion of the portfolio. I do have some money over on Solana, and I really like just this looks really, really interesting, right? Like this PY, which is PayPal's USDE, it's 10.54%. I haven't researched Centaura. I don't know, how risky this is. It looks like it's all basically, fairly safe stablecoins, but I don't know what they're really doing. It says it's balanced, right? So they're lending across a diverse range of collateral assets with highly liquid tokens and novel derivatives. So I don't know how safe it is. So I might risk this as a high risk vault. I don't really know, but I like the APY over here. Some of their other stuff has good APYs too. Like this Gauntlet USDC is a conservative vault. I do have money in this already, and it's paying 8.23%. So I'm pretty happy with that. But there's some nice, decent looking stablecoin vaults over here on Solana, on Camino. Let's take a look at StakeDAO. So StakeDAO, I noticed today. Where is it here? Is it not here anymore? Oh, here it is. USDC and USDU. I haven't done a ton of research on USDU. It's a non-algorithmic stablecoin, but still, this would fall under high risk for me. It's like an institutional sort of, I guess, lending type of token that I might consider a small position on here, but they're paying 63.91%. So maybe for a high risk stablecoin play, I'm looking into it. Just something I'm investigating. I haven't done anything with it. Just sort of looking at it. One that I am in here, and I've been in for months, is this ALUSD USDC. Again, it's a high risk stablecoin position for me here. So I have a small position here, but it's been paying above, I think, 15% steadily for months and months and months over here on StakeDAO, and I'm not unhappy about that. Let's take a look over here on BFI. So I've pointed this pool out before and considered joining this pool on Balancer, this USDC, USDT, and Go vault, paying 16.47%. And you could take a look at the 30-day average. It's above, almost at 12%. This has been a really good vault for months, and I've pointed it out several times. I was having some problems with Balancer, so I never really did put anything in there, and I'm kind of a little happy that I missed out on the Balancer exploit. But generally, when a protocol like Balancer, who's been around for so many years, has an exploit, people tend to get scared and leave the protocol. I actually get a little bit less scared because I know that their team has become incredibly hyper-focused on security. Again, doesn't mean that something doesn't happen, but I can imagine the team over there just head down, making sure there are no more potential exploit opportunities or bugs in their security. I can imagine them increasing their bug bounties and all that kind of stuff. And so I have no problem sticking some money into this, and I may look to do so. It's something I'm considering for the portfolio. It is also on Arbitrum, which I really like because I have some money on Arbitrum that I need to deploy. This is here's something I wanted to point out on. Let's go up here on Uniswap. See if I can find it here. Okay, so USDC and USDT V2 pool here paying 160.72%. So this like seems like a great pool. Like whoa, why not go in this kind of thing? And when you have a low TVL pool that's getting high volume, that's why you get these pool APRs that are higher. These are bots. I'm pretty sure most of the volume in here are bots, and these V2 pools are really inefficient, and these tend not to last. So personally, I don't really go in these anymore. I won't trust them anymore. It looks sexy from the outside, but I see no reason to do this. V2 is inefficient, meaning if the market does fluctuate, you can have impermanent loss that becomes permanent loss from these two tokens losing peg or just rebalancing their peg for a little bit. And so I personally don't really love these. I try to stick to V4 or V3 in these, which you're going to get less APY in because that's where the real volume and the real trades are coming from. So I just wanted to mention that, just briefly point that out. Because I am redoing the portfolio, I'm looking for a bunch more low risk positions that are paying a decent amount. Plasma USDT is paying 5.46%. I think I saw a couple of other places where we had some decent percentage here. No, let's look at the savings account. Look here. So Go on mainnet paying 6.36%. That's terrific. Like I'm not at all mad about that. A low risk position on Go here, or excuse me, on Aave. Let's take a look. Let's just glance at some of these other ones here too. Yeah, Go on base market paying 5.54%. No, nothing good on Arbitrum. I think I saw one that was high earlier and it just disappeared. Oh yeah, and then the real world market looked really interesting with this RLUSD paying 8.97%. It's mostly rewards here, but again 8.9% on the real world asset marketplace on Aave looks pretty cool. Moving over to Compound. Let's see here. Here it is. On base, the bridged USDC coin paying 6.49% over here on base, and then on USDS, which is Sky's used to be MakerDAO. Sky, they're now Sky's USDS stablecoin paying 7.37% over here on base, or at least it was. Let's take a look over here on Banky. This is on Avalanche, and so we've got some low risk stuff on Avalanche. I'm trying to consider if I want to redeploy on Avalanche itself and keep some stuff on Avalanche, or if I'm moving things over. USDT on Avalanche paying 5.41%. It's not too bad. Fluid had a couple of nice markets over here. Again, this is a medium risk play for me. I think Fluid will eventually go into low risk for me, but for right now it's medium risk. So I just like the simplicity of lending over here on here. So on Plasma, we're paying 6.46% for USDT. I think it was base too. No, it wasn't base then. Let's take a look. Yeah, Arbitrum over here. Arbitrum paying 6.51% on Go and 5.1% on USDC. Again, I know they're not sexy. It's only 5%, but for some really set and forget kind of plays, it's pretty good over here. And then 6.46% on USDT on Plasma, which I already mentioned, which is a good one. I was looking over on Pendle for some really good stuff. I'm seeing a bunch of things that I really want to do some investigating on. We have some fixed APY stuff that looks really good, but I don't know what any of these stable coins are except for USD AI. And so this was one I was thinking about. This is one I was thinking about doing. We have this one right here. Paying 10.89% USD AI for 107 days. I like the long-term play where I can just sort of set and forget and sit there, and I know I'm getting this 10.89%, and then maybe going out and to open cover and taking that DPEG yield on USD AI. It's 0.13%, so 13 basis points a month, which is not bad. So I haven't done the full math on this, but it doesn't look half bad to me to do that. So this is something I'm just sort of looking at. It looks not too bad to me. And then there's a couple of other ones here that are a little less, a little less risky here. Maybe USDE over here paying 9.94% is something that I'm kind of interested in looking at, especially like a little bit of the longer ones here. 9 days is not that good. So I'm just looking at some of these things and just sort of thinking about it, and I'll be reporting a little bit more on those later. That's about it. There was not a lot of really great stuff that I found this month. Of course, you can see tons of high-paying stuff if you go on DeFi Llama and look at the APY side of things. But in bear markets, I really worry about anything that has low TVLs. These can drop so fast, and even though they're paying high amounts, you may not be able to get your money out of it. They may be completely illiquid. I've had that happen to me many times over the years where I'm investing in something that was a sort of higher risk play. I took my eye off the ball because I got busy with other things. The pool dried up, and I didn't have liquidity to actually take my money out. So that can happen. So I tend to, in these types of markets, when we're sort of structurally looking at like maybe a little bit of a bear market, I'm looking more over at TVL. So I'll start with TVL, and then I'll look over this section over here at APYs, and I'll find, oh, this looks interesting, and then this is on Tron, Just Lend, USDD, 283 million. Okay, maybe I'll look at that, and then I'll just keep going down the list, right, to get some ideas. USDT on Aave, this is not actually accurate. We were just looking at that. Sometimes DeFi Llama doesn't have it accurately, but again, this is what they're reporting here. This is another one I was looking at. So for a high risk play, I had my money in Advantis a couple months ago. I took it out as I just put everything into cash, just to rebalance. Still has 106 million in there. Still, the protocol's still doing really well. It's weathering this bear market or this really bad market fairly well. So I may consider this play. That's one I forgot to mention on the channel today. But there you go. So that's it for the week. I will be back later this week with some actual protocol update or portfolio updates with some of the investments I do choose to put some money into. I don't give a full portfolio update on the channel. That will be over on my Substack, where you can see the amounts, the protocols, how they fit into the overall structure of the portfolio in terms of where they fit into the low risk, medium risk, and high risk side of things, and including my APIs and weighted APYs and expected APYs for the year. So that's it for the week. Hope you enjoyed this. Please leave any sort of comments. I love to hear from you guys. I love to work towards covering some of the protocols, blockchains, some of the things that you're interested in. I love to do those. So if you hit me up in the comment section here and just send me a note, I'd be happy to kind of take a look at that stuff. And if it fits the channel, I'm happy to cover those in future videos. It makes things super easy, super exciting, and gives me something that I know is really going to be interesting to subscribers. So, and if you want to support this channel, please subscribe, please like it, please send it around. And also, if you want to go over to Substack and support me there, I'd be super grateful. And until next time, stay stable, friends. I'm the Stable Lad. And if you like today's video, please hit that subscribe button. Every week I break down what's happening in the world of stablecoins and why it matters, clearly, calmly, and without the hype. This channel is for educational purposes. It is not meant to be financial advice, so always do your own research and manage your risk wisely.